Welcome to Trader TV. I'm Dan Barnes. Joining me today is Andrew Mulliner, Head of Global Aggregate Strategies at Janus Henderson, to discuss trading opportunities in the rates markets and particularly the impact of the new €750 billion European Union rescue package. Andy, welcome to Trader TV.
Thanks for having me. It's good to be here.
So tell us, how has the €750 billion rescue package for the European Union impacted opportunities in the market today?
It's without doubt a really big deal for the rates market. The main opportunity it's really kind of amplified, because I think it was there already, was the appetite for peripheral government debt markets. So particularly Italy, Spain, Portugal, all have benefited a great deal from this show of solidarity.
And generally, how do you see opportunities in both primary and secondary rates markets today?
You know, primary is normally not that exciting in the rates market, but actually with all the government supply we're seeing at the moment, it's a great opportunity. And what's been really notable is the amount of concession you get in some of these markets when governments are trying to issue large amounts of bonds. You know, investors aren't necessarily adverse to buying them, but we do want to see some sort of concession, some sort of cheapening. And we've seen some pretty substantial opportunities there. So if you can get in these primary issuance, you can make a decent amount of money just by riding that concession and then riding it back in again.
And how about in the secondary markets right now?
Secondary liquidity has been pretty challenged, frankly, for a while. You know, it's still not great. Obviously, it depends on the market. Italy saw a notable fall in liquidity compared to what we'd have been used to even 5 years ago, 10 years ago. Over the last few years, it's been much less liquid. And that remains the case. But you can obviously transact. You just need to be smart about how you do it.
Yeah. And whenever we see liquidity challenges, typically we think about there being a bit more back and forth between the trading desk and the portfolio manager. But in this sort of work from home environment, presumably the interaction between the buy-side trading desk and the portfolio manager is quite different. How's that functioning?
It's been one of those ones where you didn't really know how it was going to go when we were all sent home back in March. But it's worked a lot better than I think most of us expected. And the main reason is technology. And the fact is that, you know, be it calls like this, or really just the more pedestrian use of instant messenger, getting on the phone very quickly, the fact that all our systems are online essentially means that we can capture the same things we really value when we're interacting with our dealing desk. So in fact, it's not really been that much of a challenge, apart from, of course, when, you know, the inevitable IT issues happen.
Absolutely. And has the sell side been able to get out to the market? There's been no challenges in terms of engagement from that side?
No, and I think, again, it's a fortunate habit of the market. We're already moving to using instant messenger a lot more than, you know, necessarily picking up the phone, people required to be at the desks, etc. So from a technology perspective, we've been able to actually just crack on.
Given all the competition in both the primary and secondary markets right now, due to the tighter range of opportunities that exist, what's that doing to the liquidity picture? And as an investment house, how do you ensure that you're able to engage with the sell side to capture that liquidity whenever possible?
Janus Henderson's always had a dedicated dealing desk for as long as I've worked there, and it's getting on for 15 years now. So as always, it's a relationship business. However much you try and shape it up as other things, your relationships with the sell side really matter when you're on the buy side. And our dealing desk basically take care of that. So we've got really strong relationships across the street. We're able to leverage those when we need to get access to liquidity. I mean, for the most part, liquidity is not that much of a problem. But when you really need to access it, that's when your relationships count. But that's where we're strong.
Andy, thanks very much.
You're welcome.
I'd like to thank Andrew for his insights, and of course you for watching. To catch up on this and other shows, go to tradertv.net and etftv.net.